Two people could buy the exact same house in Florida next year. Same price, same neighborhood, same assessed value. But one of them could get up to $250,000 of property tax exemption, while the other could get just $50,000 and have to wait years for the bigger break. The difference? Whether they are already a Florida resident before December 31st, 2026. And here's the part people are getting wrong. You may not need to buy the house before that deadline. You may need to establish Florida residency before it. So let me break down what Florida voters are actually being asked to approve, what this should mean for your payment, and exactly what you should do if you already live here, plan to buy here, or are thinking about moving here. First, let's get the headline straight. Florida lawmakers approved a proposed constitutional amendment that would give qualifying homeowners a much bigger property tax exemption. Voters still have to approve it in November, but if they do, this is how it would work. Starting January 1st, 2027, qualifying Florida homesteads could get up to a $150,000 exemption from non-school property taxes. Then in 2028, that number could increase to $250,000. That does not mean you get a $250,000 check, and it does not mean your entire property tax bill disappears. It means the first $250,000 of your home's assessed value could be exempt from the non-school portions of your property taxes. Think county taxes, city taxes, a lot of local taxes. School taxes would still remain, but this could still be a serious savings. For example, if the non-school portion of your tax rate was 15 mils, a $250,000 exemption would mean around $3,750 per year in savings. That is over $300 per month. Again, every county is different. Your actual savings depends on your assessed value, your local tax rates, and your exemptions. But the point is, this should materially lower the cost of owning a home in Florida. Now, here is the part that matters most. Florida is creating two different lanes. Lane 1, you were already a permanent Florida resident by December 31st, 2026. If that is you and you establish homestead on your primary residence, you could qualify for the larger exemption, up to $150,000 in 2027, then up to $250,000 in 2028. Lane 2, you establish Florida residency on or after January 1st, 2027. You would still get the homestead exemption, but you would start at a $50,000 on the non-school portion. Then you would have to wait until your 5th year of exemption to qualify for the larger amount. So the message is not buy a house before December 31st. The message is if Florida is generally becoming your permanent home, understand the residence cutoff before December 31st. Because you could move here now, rent for a little while, buy later, and still potentially be in the stronger lane. But if you wait until 2027 to become a Florida resident, you could be waiting years for the larger benefit. And that is a big deal for buyers. Because when most people buy a house, they focus on the rate. Then they focus on the purchase price. But your property taxes are part of your actual monthly payment too. They affect your escrow, they affect your debt to income ratio, they affect how much house you can qualify for. And they affect whether that affordable house is still affordable a year after you close. So if you are buying a home in Florida, here are the 4 questions you need to ask before you make an offer. Number 1, what will the taxes look like after I buy the house? Not what the seller pays. What will I pay? Because a seller who has owned a house for 15 years may have a much lower assessed value than you will after closing. Number 2, what is the home's current assessed value? Not Zillow value, not the list price, the assessed value. Number 3, is this going to be my primary residence? Because this major exemption is for homesteaded primary homes, not your rental property, Airbnb, vacation home, or second house. And number 4, based on my Florida residency timeline, which lane would I likely fall into if this passes? That is the question people are going to wish they asked earlier. Now, for current Florida homeowners, here is your move. Go to your county property appraiser's website. Pull up your property and look at 3 things: your assessed value, your current homestead exemption, and your taxable value. Then pull up your latest tax bill and see how much of it is school taxes versus non-school taxes, because that is how you estimate what this could actually mean for you. Not from a headline, from your actual numbers. And for investors, this is not useless either. You would not get the bigger homesteaded exemption on a rental property, but the proposal would reduce the annual assessment growth cap for many homestead properties from 10% to 5% on non-school taxes. That does not mean your taxes can only rise 5%. Your mileage rate could still change, but it could make long-term property tax growth more predictable. So the bottom line is this: if this passes, it should be one of the biggest affordability wins Florida homeowners have seen in years. But the people who benefit the most will be the people who understand the deadline, understand their residency status, and understand what their taxes could look like after they own the home. And if you're buying in Florida, do not just ask, what are the taxes today? Ask, what would be my taxes be after I close? Because that is the number that matters. If you want me to help you run the real payments on Florida listing, including real estate taxes, insurance, HOAs, and the mortgage, send it to me. I'll see you in the next one.